This is corporation tax, part of learning aim 2, the business environment in which retail businesses operate. And when you see Eduardo, Ethel's twin brother, click for help on the subject. So here's the breakdown of the corporation tax lesson we're looking at. First step will be to know what corporation tax is in terms of direct, indirect, progressive or regressive tax. Then we're going to look at knowing the different corporation tax rates, because it's layered like we've covered in VAT and national insurance. And then you're going to be able to explain how these different ownership types of companies might benefit from the different corporate tax rates. So the vocabulary we're looking at will be the indirect and direct tax, which is whether it's linked to earnings, like direct taxes, or not linked. If it's direct tax linked to earnings, it's progressive tax. Otherwise, it's indirect and regressive tax. We're going to look at a shock profit warning, what that phrase means in terms of our ASOS case study, because believe it or not, investors don't like that. So knowing how that you've completed the lesson successfully, you'll be able to make the statement of what corporation tax is. You'll be able to state the different rates for limited companies and then sole traders or partnerships, because they're different, and obviously the explanation we're looking at of how companies benefit. The jobs at the bottom are specific tax ones. We're looking at corporate tax manager, equity tax and partnership tax specialists. Your work list for corporation tax, there's 2 tasks. There's one on evaluating the difference in corporation tax for a limited company compared to a sole trader or partnership, and the second task is the ASOS case study. What is corporation tax? Corporation tax is paid by some businesses on their profits. Unlimited businesses such as sole traders and partnerships are taxed differently to limited companies. All sole traders and partnerships are taxed via a self-assessment system each year and pay income tax and national insurance contributions on their business profits after deductions for expenses, so they do not pay corporation tax. Secondly, a limited company is taxed as a separate legal entity from its owners and directors. Limited companies have to pay corporation tax to the government on their annual profits. So that last part we've come across before, that about limited companies being seen as a separate legal entity. That means any shareholders of a private limited company are going to get corporation tax as the company, not as their individuals, whereas the sole traders and partnerships, because they are the business, then it's the person that gets the tax. How much is corporation tax? The corporation tax rate for a company's profits was 19%. This reduced to 18% in 2020. For limited companies of any size, corporation tax is charged at 19%. So let's look at a little bit of a breakdown with regard to sole trader and partnerships. These 2 company types have tax-free allowances up to $11,850, so they can earn up to that amount and not pay corporation tax. There's a basic rate of 20% for income of $18,850 up to $34,500. So in between those 2 amounts, sole traders and partnerships will pay 20%. And there's a rate of 40% if their income is in excess of $34,501. So this is where it's got those layers rates again, which we've come across on VAT and income tax and national insurance. So you can see it's quite a minefield we're looking at with tax. And then there is a third rate where if the sole trader or partnership has an income over £150,000, they pay 45% in corporation tax. So there's 3 different rates depending on the income, and if you earn the top amount, then you would get slices of corporation tax for those amounts that's shown in the diagram. Task 1. Using the data On the right, there's a copy of the last slide. Explain the advantages of operating as a limited company and not as a sole trader or partnership. So if we look, on the third line, you've got that limited companies of any size is at 19%. Then for a sole trader or a partnership, you've got that layered approach depending on how much income the company makes. So those are the two key points you need to explain when you're looking at the advantages. And then remember, explain is you make a statement and then you add 2 or 3 details to that statement. Who pays? Corporation tax is a tax on company profits. It is paid before shareholders are paid their dividends. Dividends is that word where the shareholder takes a percentage of the profit. It is sometimes called corporate tax or business tax and is another example of direct tax. This tax is calculated from the net profits earned by a company. And if you remember from lesson 2, direct taxes are progressive tax because they are linked to earnings, and in this case it's the company earnings. If a limited business makes no profit, then it will pay no corporation tax. If a UK-based company sells abroad, then it has to pay corporation tax on all its profits from the UK and abroad. If a company isn't based in the UK, but has an office or branch in the UK, like Amazon or Apple, it only pays corporation tax on profits from its UK activities. ASOS case study. ASOS shares slump as it warns on profits. Shares in ASOS have sunk after the online fashion giant said that this year's profits are likely to be much lower than expectations. The retailer said sales growth in the US and Europe had been held back by problems at its warehouses. These problems meant that the range of clothes available to shoppers in these markets had been limited. As a result, it now expects to report profits of 30 million to 35 million this year, well below the 55 million forecast by analysts. ASOS Chief Executive Nick Baton said overhauling its US and European warehouses had taken longer than anticipated, affecting its stock availability, sales and cost base in these regions. He added that the company was clear on what was causing the problems and was making progress on resolving them. However, ASOS said that while the warehouse problems were short-term in nature, it added it might take some time to regain customers who had been affected. Total sales across the group rose by 12% in the 4 months to 30th of June, ASOS said, and in the UK, where trading remained robust, sales grew by 16%. However, the operational challenges at its warehouses in Berlin, Germany and Atlanta, US had caused problems in the US and Europe, where sales were up 12% and 5% respectively. ASOS has enjoyed rapid growth in recent years as it has benefited from the shift towards shopping online. However, last December it surprised investors with a shock profit warning, and the company's share price has now more than halved over the past year. Shares in ASOS opened down 20% on Thursday following the latest warning, before recovering some ground to stand 12% lower. Russ Mould, an investment director, said, "Fashion fans have plenty of places from which to buy clothes, and so ASOS is at risk of losing out to the competition if it cannot fix its problems fast. We live in an impatient world where so many people want something in an instant. If ASOS doesn't have the stock ready to ship, then consumers will simply go elsewhere." However, Sophie Wilmot, another analyst, was more upbeat, arguing that the changes being made to US and EU distribution centres are vital to facilitate long-term growth in these key markets. She added that the future remains bright for ASOS. The retailer's agility and willingness to change to remain relevant to its customer base will help it to continue gaining market share both at home and abroad. Task 2, your questions. First question, comment on the profits made by ASOS. Well, if you look at the pink highlights, we've got the exam command word comment on and the figures with regards to ASOS highlighted. So the clue here is knowing how to deal with the exam command word comment on. So if you just copy those figures into the answers, that's not what it's asking you to do. It's asking you to make a statement about what's going on. So you need to put, first of all, write a full statement, and then you need to comment on, are the profits high or low? Are they higher or lower than expected? Because that's just the information that you've been asked to comment on. Question 2. Explain why these profits were not as good as expected. Now here, obviously, the green highlights are going to help you with the answer to question 2. But again, in the question, I've highlighted the command word so that you know how to respond to an explain question. Now there's 2 parts that have been highlighted. So we're looking at the initial problem in terms of the ASOS's issues, and then we're looking at the area in terms of consumers. So explain is going to ask for the statement and the development on it. So you need to make sure you've got both. And at the moment, the recommendation I'd say to you is make sure that you cover both of those statements, both of those reasons for ASOS's profits not doing as well as expected. Question 3. Explain why share prices dropped by 20%. The red highlights go through and actually look at all the share prices and the share movement that's gone on. And now here you've got the same as before, you've got an explain question. So we've got to look at some of the reasons. Now, what happened to these shares has been highlighted, and that's on the left-hand side. On the right-hand side will be more of the reasons. Now, if you're looking at that saying, why on earth would rapid growth cause a shock warning to investors? If you think about companies that all of a sudden expand and expand very quickly, for investors, they would worry that whether that growth can be sustained, almost like a balloon, a sudden burst and then balloons pop and then it drops down. So that's a very worrying time for investors, because people who buy shares in companies are not in it usually for a quick turnaround within a couple of weeks. They're in it for a number of years, because that's what they want their investment to grow. So that's the kind of thing to think about in terms of why a shock growth might worry investors. That's it, the 2 tasks for Corporation Tax Lesson 6.